What is up, YouTube? Today is Tuesday, August 12th. I took one trade today. The trade that I took was this one right here. Very good and easy trade. It fit all of the aspects of my trading model. And honestly, there was like little to no drawdown in the trade itself. So that was very nice. We had three good setups. I didn't mark one out here, but we're going to go over it in a bit. But so today we had news, right? We had news in pre-market, and as you can see, we did have a huge pump on up. Price started to, drift down lower and then bounced in this area to then continue all-time highs again. So why did I come in with a bullish bias this morning? So the main reason here on the 4-hour chart, we can see that we're still holding this 4-hour FEG. Actually, let me turn these off so you guys can see it much better. But the biggest thing that we had was this 4-hour FEG, right? We were still holding that for the most part. We did have a couple of touches into it. That doesn't mean anything to me as long as the body does not close below it. That's really all I care about when it comes to these FEGs. Yes, we did invalidate this one, but overall the structure is still bullish, right? We have this swing low, swing high, higher low, higher high, higher low. So we can expect to put in a higher high at this point. Coming down to the 1-hour time frame, what do we see on here? Pretty much the same thing. We had invalidated this 1-hour FEG right here to move on higher, and we were just creating higher lows overall. Here we have this big push on up, right, with news, which invalidates this bearish fair value gap right here on the hourly time frame, which is again making bullish structure and bullish order flow on the hourly time frame. So now on the 15-minute time frame, all we need to look for is the same exact thing. So I was thinking coming into the first macro at 950, we would be holding this 15-minute fair value gap right here. But as you can see, we get this very huge drop down. We invalidate this 15-minute fair value gap and also the small one that we had right there. Now, the reason why I said longs would have still been valid in this area was if you go back out to the hourly time frame, you see with the invalidation of this bearish fair value gap, we create a bullish one that we do end up holding at 10 o'clock. Okay, so that right there would have been a sign to potentially go long. Now, I wouldn't consider it A+, which is also why I didn't take it. I saw it forming. I kind of hesitated on it because I wanted to see further confirmation to the bullish order flow. Mainly seeing something develop on the way up on the 15-minute time frame. I didn't like that the 15-minute did not align to the order flow, but the structure was there, right? The 15-minute had bullish structure, higher lows, higher high, and yeah, it gave a bullish kind of sentiment on all of those higher time frames that I usually look at. Another big thing, and I don't usually talk about this too often, is the daily opening level. As you can see here, price, is kind of hovering around this daily open, and then we get that pump on up, but we start to come down, right? Everybody at this point was bearish. They were looking to go short at this point because they thought, yeah, we're going to continue down lower to rebalance some inefficiencies that we left behind. But look at the red line. That's the daily opening level. That is the open of the daily candle itself, and we bounced off of that. So all of the price action under it is just the lower wick. The fact that we bounced off of it and have bullish structure shows that we wanted to put in a green daily candle today. So I had no reason to be short biased whatsoever. Had we displaced below the daily open and stayed below it, then I probably would have considered shorts. But when I saw that we bounced off of that daily open as well, I was like, yeah, I'm definitely not going to slap on shorts today. I'm 100% going to be looking for longs. So like I said, there was a setup here in the 950 macro itself. Like I also mentioned, it was not high probability in my opinion, but the setup was still there nonetheless. As you can see, here is the 1-minute bearish fair value gap that was created. Or you know what? Where is it? It doesn't show up. Let's just make it white. That's even worse. Can I do the outline as black? All right, whatever. Anyway, this fair value gap right here, it gets invalidated with this 10:02 candle. Very high risk, high reward kind of entry. It practically hit the bottom on this drop, but this is the trading model. The 1-hour was there. There was a 1-hour bullish fair value gap that was holding. The 4-hour was obviously bullish. The 15-minute was the only thing that was not. So that's why I personally didn't take it. I saw it and I still debated it over here. But because we didn't have the 15-minute be fully bullish at that point, I said, never mind. I'm just going to sit on my hands and wait for the next macro. And lo and behold, we got a very good push on up here. So coming into this macro, on the way up, we did have this bearish 15-minute, but we also created a bullish 15-minute on the way up. And this one was being respected. We did consolidate inside of the bearish 15-minute fair value gap right there, but failed to create any kind of displacement lower, holding that 15-minute bullish fair value gap. All the signs were pointing to this being bullish. We end up getting a retracement here. We hold that 1 minute FEG right here, get a bearish FEG right there, invalidated, entry right there as soon as that happens, or at the level of the actual IFEG. Put your stop below the swing low. And what am I targeting? I targeted high of day and all-time highs for a 1 to 2.33 risk to reward. Full disclosure, I took it at a 1-to-1 because I was busy again. I've been super busy the last couple of weeks, and I hate that I can't watch my trades as much as I would like, because then obviously I'd be able to capitalize on all of this move. But I can't be complaining. I still ended up green, right? So that's really what counts. Coming into the New York lunch session, there's no reason to be shorting all-time highs ever. Don't ever short all-time highs. Stop thinking that you can catch the top. Stop thinking you can catch the bottom. All right. So here, no entry for a long. If, like I said, if you're trying to short all-time highs, this would have been your short entry, especially with these two fair value gaps getting invalidated. You would have gotten cooked. Simple enough. Don't do that. Order flow was bullish. There was no bullish entry. This would have been the bullish entry if we had invalidated this 1 minute FEG right there. As you can see, price respects it. We only invalidated it outside of the macro. Now, I don't trade outside of the macro. If that's what you want to do, go for it. I have realized that my entry model is lower probability if that is the case, that we are outside of the macro itself. I'll make it orange so you guys can see it. So that's why I don't take anything that is outside of the macro. Coming into the 1:10 p.m. macro, where is there a bearish fair value gap created inside of the macro right there? Right there. Simple. Gets invalidated. Target a 1 to 1.5. Because at this point we're at all-time highs, so we're just strictly looking at risk to reward. If you had your entry right back at the IFEG itself, that was a 1 to 2.3. I mean, don't short all-time highs. That's literally what I want you guys to take away from this. If the structure and the order flow on all time frames is bullish, don't go trying to short it. Even here, if you tried to short it in the last hour, you would have gotten messed up. Stop loss would have gotten hit. And then also, there was no bullish entry here, so no reason to take anything at this point. Outside of the macro, once again, if you had your stop below that, boom, you get stopped out. That's why I don't trade outside the macro. As long as the regular fair value gap gets formed inside the macro and then also invalidated inside the macro, and it aligns to our overall bias on the higher time frame, go for it. That is my A+ setup. So these were the trades that you could have taken today according to my trading model. That one down here, but like I said, it was an A+. This was A+. This was A+. And it was a pretty simple and easy day, even with having pre-market news. So hopefully you guys ended up green, and I will see you all tomorrow. Peace.